Hey guys, Professor here for another video. Let's get into it. Today we're going to talk about the EMAs, the exponential moving average. So let's talk about it, right? The EMAs, you want to use it because it gives you a good idea of the trend of the candles in the specific time frame. So what I use is, I'll show you right here. Let's move this out of the way. The EMAs. What do I use? I use the 9, the 20, and the 200. To simplify things for you, let's look at it further. What you want to understand is, again, keep it simple. EMAs are basically support and resistance lines. That's what that is. The 9 is a good one. 20 is really strong support or resistance, depending where the candles are. And the 200 is really strong support resistance, depending on where the candles are. So that's what I use to gauge my entries and exits. So let's look into it. Let's go further. Let me move my face to the corner. So let's go. First things first. Oh, that shouldn't have happened. First things first. Let me show you how to pull them up. And I'll also show you the colors I use. So you want to go to indicators. These are all the indicators I use. You want to click on moving average exponential. You could type that in and this will pop up. I want you to click on this. Let me show you. Indicators. Click on this 3 times. Let me move this out of the way so it's not confusing. All right. 1, 2, 3. All right. So now what you want to do is go here. Let's go to the first one. It's already 9, so we are good to go. The color I use for my EMA is this orange right here. Thickness, second. Okay, done. Let's go to the next one. EMA. Change the length to 20. Style. Let's change the color to purple. The thickness. Oh, let's have it thicker. Okay. Next one. The third one. Let's do. Wait, is that the same one? Let me just confirm. Yep, different one. I want this one to be 200 length. And let's do this one green. Second thickness. Hold on. There you go. Here, you can see it again. Right here, this green. Let's hit OK. All right, so now that's done. So let me show you, okay? Let's check this out. Let's go to the 1 minute chart. So I want you to see something with this. I want you to notice, and I'm sure you notice these big pumps right here on the candles, right? Let's go through each one. Let me just show you to give you an idea. Let's forget the morning. We don't trade in the morning. Let's extend this. When I mean we don't trade in the morning, I mean we don't trade from 9:30 to 10. We trade after that. The market's too volatile. So if you notice, again, just to confirm, yellow is the 9 EMA, purple is the 20, this green, ignore this, this green is like the price right now. Ignore the dotted line. This dark green is a 200. So when the 9 and the 20 cross and the candles are above, it's called the golden cross. But again, forget the vocab. Not relevant. Keep it easy. What you need to understand is anytime the candles are above, you want to be in the trade. It is in a bullish formation when it's above. When it's below, as you can notice right here, price falls. More red candles appear when they are below the 9 and the 20. So you always want to get when it's above. Look at this massive pump that happens. And when it breaks it, the trend goes below the 9 and the 20, fall. And it doesn't go up. It goes up for a little bit. The trend is downwards anyway. And let's check it out again. Look at that. They cross, candles above, rocket ship to the moon. Let's go back. Let's look at here again. Look at this fall. Got overextended. So this is another thing we should talk about, right? When the candles get overextended from the EMAs, which means, let's set the magnet off, which means they get too far away, they always come right back down like a rubber band. pushing a rubber band, the harder you pull it, it will always go back to the way it is, back to its formation. You stretch it out, it snaps right back. And the harder you pull it up, or hold the rubber band and hold it further away and snap, the harder the hit is. And look at that fall. Let's show you more examples. Let's show you what happens when you're below all three. Now check this out. I want you to notice something here. When the candles got below the 200, dark green, 20, purple, and the 9, look at the collapse. Look at that fall. And look, they're all under all three EMAs. This tried to go over it, but the 20 pushed it right back down because the 20 is extremely strong resistance if it's under it, or if it's above it, support. But look, it went up. I would have never taken the entry. You always want to take the entry when the candles are above all three EMAs. As you can notice, again, to reinforce the idea, when it's above, it's strong support. It holds on it. Look right here. Look at these two candles. It held on the 20, natural support resistance. And now look, it got stuck, but then it broke through, but it collapsed again. And when it's under it, it's stuck on resistance now. You want to take the best trade possible. The best entry would be 1 penny above both, that third one as well, but right here would be your 1 penny above. And your exit would be when it breaks and falls below. Again, if you use trend lines, price action, support resistance, you would gauge that it broke the trend here. But again, that's a lesson for another day. To simplify it again, the EMAs are natural support resistance. Use all three, the 9, the 20, the 200, to make your trading more successful. All right, guys, that's the professor. Have a good one.